Good morning, everybody. Welcome back to the Schwab YouTube coaching channel. It's our Thursday edition of Trader Talk in today's market. I'm your host, Kevin Horner. It's a little overcast here in Denver, Colorado, but I'm pleased to have you all joining me today. I'm also joined by Brent Morris here in the chat. So say hey to Brent, who of course will answer comments and questions I'm unable to get to in today's segment. But please do feel free to post in there for the duration of the show. We go about 45 minutes in total today. We've got some charts to look at, of course. We're on the heels of some earnings announcements. We heard from Alphabet. We heard from Tesla. We're going to look at those. We've also got a stock trade that we put on a few weeks back that we're going to take a look at in our example portfolio, that an example trade that is, that's made an interesting move. I'm excited to look at it with you all because while sometimes our trade process doesn't play out the way we might expect or the way we want, today we're going to look at this example trade and find that some of our process was very helpful in maintaining our position. So I'm excited to highlight that with you all. If you're not already doing so, we'd appreciate a follow on X. You can do that for Brent at Brent Moores CS and for me at Kevin Horner CS. And we try to post for you there throughout the week with some notable charts, maybe some data points of interest as well. So a follow there would be helpful. All right, tell you what, everybody, let's jump to what's happening in our disclosures, and then we'll get into the chart. So first and foremost, remember that our conversation is exclusively informational and educational. We do not make recommendations here. We do not make endorsements for a specific approach to trading the market. Additionally, we'll remind you that technical analysis, while we discuss the strategies and concepts traders may choose to employ here, we do not encourage you to make decisions based exclusively off technical analysis. We think it can be a piece of your decision-making puzzle, but should not be the entirety of your decision-making puzzle. Now, as an agenda, we'll maintain the process we usually do, top-down methodology here, looking at the major indices, so S&P 500, NASDAQ 100, Russell 2000, the semiconductor index, and then perhaps some other tertiary groups, sectors, and industry groups here as well. But before we do, I want to remind you, if you're not already doing so, make sure you've got this schwab.com/events page bookmarked, everybody. We're coming up to coming up to August pretty quickly here. We're going to be in Chicago. This is our next one where we actually have registration available and seats available, everybody. These do fill up fast. So if you're interested in attending, we'd love to have you. Now, there is a difference, as a reminder, between our traditional workshops like you'll have in Chicago and DC versus the market drive. Remember, your workshops are 2-day events where we invite you to bring your device. You can get power at your seat and Wi-Fi access and follow along with the face-to-face educational workshop. Now, in the market drive event, little different. We don't provide power. We don't provide Wi-Fi, essentially, but we do host a conversation around macro market events. You'll have a third-party guest commonly and an opportunity to engage with Schwab in a multitude of areas, including your branch representatives, Schwab Wealth Advisory, fixed income, and so on. So we'll basically introduce you to all the avenues of Schwab if you're unfamiliar. But the events are great. We'd love to have you attend, everybody. Of course, they are free to do so. So please, if you're in an area like this, we would love to have you join, come out and shake some hands. All right. With that, let's get into the S&P 500, everybody. We made a new closing high yesterday. Big, beautiful candle that worked our way through some recent consolidation. I was noting with Brent yesterday how we'd had these back-to-back candles that were trying to tell us something, and evidently the detail we're getting from the broader market here is more of the same. We had these Monday candle that looks like a bit of a a dragonfly doji or a shooting star, something that might be construed as negative. And we did open weekly the following day, but you got a hammer candle the very next day. So you had basically back-to-back moves where we closed at the open, but we tried both directions to push. Bears tamped us down on Monday. Bulls supported our low open on Tuesday, and we are right back making new intraday highs as we speak. Unfortunately, there's not much more to say, everybody. As it relates to the S&P 500, many traders are just following along with the trend, and I'll continue to highlight the ease with which a trader could have done so here at this point, because if you simply sat on one's hands and said, I will only take action if something different occurs, well, you still have not had reason to do so in the S&P 500. So a lot of traders simply maintaining levels, raising stops along the way, and looking to capitalize on the continuation of the trend. Now, if we look over in the NASDAQ 100, I'm sure you'll find that we're not going to see a whole lot of discrepancy here, everybody. So let's kick it over to there. NDX, same thing here. 20-day moving average every step of the way. I can put those same ovals on and highlight that. So there's the first one, April 23rd, of course, when we caught the 20-day. An approximate test here. Another approximate but consistent test along the way. My apologies, everybody. I appear to have a frog in my throat. Give me 1 second. All right. Thank you, everybody. I think I got it, but we'll see if I can move forward here with my voice. My apologies. So we, excuse me, we do continue here the same thing with that 20-day moving average rising along the way. So waiting for something different, still haven't found it. So as traders, it's perfectly fine to sit on one's hands here to make sure that we get a shift before we actually do something. So if we are continuing that same process, well, then once more, we might be bored as we watch the market continue to do what it's doing, but we do not necessarily need to take action. Now, I will point out that when I'm talking about not taking action here, everybody, this is for a very specific type of trader. That's the trader who simply wants to follow the trend and has not does not have concerns with selling along the way at upper levels. Many of you are going to feel a little bit more comfortable, perhaps, by taking some off as we achieve these new levels in price. So while trend traders might continue to hold and maintain because the moving averages continue to climb and we have not closed below it, as an example, some of you might be feeling like you want to capitalize. And I'll just remind you that there is nothing wrong with simply putting yourself in a position of comfort every step of the way. So if you do not like the idea of selling on weakness, if that is not your comfortable process, well, then selling into strength may be preferred. So one way to think about it, right? Define who you are as a trader. What is the process you would prefer to utilize, and then carry that forward here. Okay. Yeah, I got to say, everybody, I don't know what's going on with my voice. I'm fighting it a little bit, but that scratchiness certainly came in at the wrong time. And of course, Wiley, tacos are not necessarily going to be the right fix, but I wouldn't turn them down any given day of the week. Tuesday, Thursday, Sunday, I have no preference. It's all a taco day to me. And I will be honest, this week I have been watching a lot of Ozzy Osbourne content as well the last couple of days, just simply taking it all in, kind of celebrating his life. He was an amazing individual, and it's been a fun couple of days just being reminded of just how much fun he was. Anyway, okay, so there's a look at our NASDAQ, everybody. Let us move into small caps. Today, small caps are pulling back a little bit. We're off about 0.5%, but are we really at a point of concern here? Many traders would suggest no, because what we have was is today a breather after having broken out. So let's zoom in to just basically, the year-to-date move And we'll see that this consolidation got broken yesterday with a new short-term high close. So the viewpoint here might be most easily visible, everybody, even though we've got these, I got my lines drawn in. Let me just pull these lines off. And I know we tend to lean heavy into these candlesticks, and I do agree that candlesticks are the way to go. Sometimes traders want a little less data. Sometimes we can be simple in our approach to how we trade, and we don't have to utilize necessarily candles. So I just wanted to point out, if I changed my chart style from candle to line, it might be a little more evident that we've really closed at a new closing high. So the line chart, as a reminder, is placing a point at every closing spot, right? Not taking into account intraday price action. So for some traders, it might even be just a little bit easier to incorporate the line chart here than the candle. And when I put that line in and put in my horizontal support and look at it on a line chart basis, it does appear that we've very clearly broken to the upside. Now, that doesn't mean it has to go higher, of course. However, a breakout like this does give you the impression, with limited upside to the next level, it gives you the impression we could easily drift into that 23.15 area of the next possible resistance. In fact, I'm going to go ahead and make that a red line so it's a little more obvious as to what its intention is. And let's go ahead and kick my style back to my candles. But I just wanted to point that out, everybody. So, what we're getting today is likely to be an inside day. An inside day being the 2-day candle viewpoint, where today's action will be fully encased within yesterday's action, right? So that's one way to give consideration there. All right, so very easily, when you're looking at this candle now, trend direction next move is going to likely be based on the low we created yesterday or the high we created yesterday, right? We could go sideways in here for a little day, today and into tomorrow, but ultimately our next directional move could be dictated by a move through the high yesterday or the low yesterday. A move through the low, likely test the 20-day, hopefully hold it. But a move through the high, and we could easily be seeing resistance at that 23.15 relatively shortly thereafter. So again, you all know that when we talk about this stuff from a technical basis, it's all based on probabilities. It is not based on certainties, as I like to say. So keep that in mind. Even though 23.15 presents right above us, doesn't mean we have to get there, but that likely becomes a target zone for some short-term bulls in small caps. And we talked yesterday with Brent about some of this additional movement that kind of helps us understand what's going on. And, the yields have moved a little higher, but everybody, this chart is telling us that there's not a lot of action. We've had some back and forth, but if I pulled this back to a weekly, look at how tight our range in the 10-year has been. Let's make this a little more tight time frame. How about just the last 3 years here? And you see, basically, we've had much lower rates, lower yields, right? It's absolutely true. But what's going on now is not what we've been dealing with here. We had big yield move, obviously, off of our lows, right? Huge move to the upside here. Very speedy in terms of the time frame it took, and a very speedy move from here to here, and maybe a speedy one from here to here. But look at what we've done lately, everybody. This is a lesser move than this one was. And the reason I'm bringing it up is because we're not getting significant shifts in yield action. That is giving us an opportunity on the equity side to digest this move much more comfortably. And so as we go sideways, as we no longer see a significant rate of change in yields, it is not top of mind relative to the market. And I think that's what's giving comfort to where yields reside, giving traders and investors alike a little bit more understanding that yields are apt to remain relatively high relative to what we had in the past. And I think a lot of traders would suggest that they're unsure if we're ever going to get back to yields as low as they were, before we started to see these moves. This 2.5 in 2022, I mean, a lot of traders with whom I've spoken are dubious about the idea of ever getting back under about 3.5. That could very well be the cycle low, the low we see. If that happens and we maintain, then we're just simply going to grow more comfortable with yields where they reside. And this is honestly a little bit more like an average yield area that we have seen historically, whereas the artificially low yields we have had since, say, 2009, 2010, all the way through basically 2022, that window was the anomaly in the way that yields have presented historically. So just as a thought. Now, the groups that are moving right now on the heels of yield sideways and yield maintaining and yield kind of not giving us a lot of rate of change. We saw that breakout yesterday in utilities, and the last couple of days in utilities made a new high in utilities yesterday. Now you're getting a little bit of a throwback move. Entirely possible that we could be seeing a little continuation here. Brent and I did talk about the home builders yesterday. Real estate as a group has also managed to take its way through an area of resistance with the move this week. This was a pretty good zone to get through. And the fact that it's above the 200-day moving average for a lot of traders means it's back in trend. And if I drew a trend line through what has the majority of the price action in here, well, then some would suggest we've broken the trend line with the real estate group, another interest rate sensitive area, right? So does it feel right now like the market is rallying in just about every area? It kind of does. Doesn't mean that has to continue, but boy, is it broad-based in terms of the moves. Today, the big winner right now is communications. And of course, this is going to be tied to some of that earnings detail. So I wanted to move on through the stocks in the news. We're going to look at, like I said, Alphabet. We'll look at Tesla, etc. I wanted to answer some of your questions. You guys are already on the ball. I don't think I need to answer anything. You're all making note of the fact that the industrials are off about 0.5%. We've had a rough open on IBM. We had United Health getting beaten down again, and looks like Honeywell also with a gap lower. So, I mean, the Dow 30 are, a very small collective group. I'll point that out. But, we can continue to see the Dow do what the Dow's been doing. It actually has been very strong and still dabbling with a breakout. Short term, it broke yesterday with this, but you can see the important ledge is the 45,000 level. On the daily, on the weekly, it does look very much bull flaggish in here, but got to trade through 45,100 probably to validate a breakout. But it doesn't look terrible at all, right? So let's see. All right, what else do we have? Okay, before we get to those stocks in the news, everybody, I want to address this trade that we have, an example trade in the example portfolio. We put this on a few weeks ago, and I thought this was great. So let's take a peek at RTX, Raytheon, formerly Raytheon, now RTX. RTX here, we have a sell order in, we have a stop, but I want to talk about what we did that has worked out really well. Last week, we placed a stop order on the position to protect us. So let's look at the chart. All right. Oh, look at this. This is good stuff, everybody. So I'm going to zoom in. The first thing I'm going to do is I'm going to add back my show my trade so that we know exactly where we took the position. So that should have immediately populated, but nonetheless, we are basically in. I think we got long here a couple of weeks ago on like a test here. I feel like we got long on the 26th of June. Let me just double check. Here's our trade. Yep. June 26th. Beautiful. During class, of course, we made the purchase. We got in at 142.5. We didn't put a stop order in until last week. And we did this, everybody, based on, let me bring in one more piece of detail here. I'm going to bring in my tools. We add in the average true range. So what we did last week was we used the 20-day moving average on the day we were breaking out, the 17th, and we looked at the 20-day and said, well, let's go ahead and use a level beneath the 20-day equal to the average true range of about $2.50 or so. And so we looked at the 20-day on this day and took that value. There it is. Okay, 142.53. Beautiful. And then, like I said, about a week ago, right here, the 20-day was 145.96, and we put our stop order in at 143.53, so about 250 beneath it, right? And that happens to have held. Look at the low trade we had from Tuesday. Our low was 143.56, and our stop is 143.53. And now the stock has not only held that, didn't take us out, but it took us to new highs. Now, I'm only bringing it up just to reiterate a point. Number one, great trade. Hey, happy that we set a good stop. Number two, okay, that's not going to happen every time, everybody. But I hope it illustrates the methodology, the benefit to incorporating something like average true range when trying to discern whether a drawdown is capable of breaking a true trend. In the case of RTX here, it was not at all a surprise that it broke the 20-day. But what we as traders need to be able to handle is the move through the 20-day on an intraday basis that could still be bought up and held as support. And ultimately, that's what we got here. Was it a little bit lucky? Sure. But it was also a validation to an extent of our process that left us in this trade. Got close, but as traders, because we have that automated process, that automated exit strategy, we didn't need to make a move outside of, we didn't need to do anything different. We could just simply sit on our hands. We didn't watch tick by tick. We weren't paying attention as it got down to the near the stop. We didn't make an adjustment to get out. We just let it go simply because we could. So is it a little lucky? Absolutely. But again, it illustrates that the process can work if we build in average true range as a means of understanding the true trend and what we can absolutely get with or work with. Hey, everybody, I see we've got a survey opportunity here in the chat. Thank you for reposting that, Brent. You know, I always appreciate your feedback, everybody. As we say, if you take a minute to let us know your thoughts, put any ideas in there, they're going to be read. I absolutely respect the time you take to give us those scores and those comments. They're very helpful for us. And they come directly to me as the host. And when I have a co-host, the co-host gets it as well. So listen, we love that feedback. It helps us out and would be really helpful for us to let me know more of what you want to see. For example, Thursdays, as you know, when we do host this one solo, I love to bring you individual charts, right? Stocks in the news where I can. And we're going to look at more of those right now. But I hope that's the reminder more than anything else, is that your feedback is frequently incorporated into subsequent shows. So really appreciate you taking the time to do that, everybody. All right, so there's a look at RTX. Last thing I want to ask all of you, and I'm going to leave it to you. Given that we have made this maneuver to new all-time highs in RTX, I would like to know, and I'm going to basically let you guys decide, do we keep the stop order where it is? We legitimately could raise it, but the adjustment might be kind of limited in scope right now. We wouldn't necessarily be capitalizing tremendously, but we could look at the 20-day once more today at 148.18 and incorporate that $3.03 level in ATR. So if we were to do that, incorporating 148.18, see here, 148.18 less the $3.03, then we could raise our stop to 145.15. So we could capitalize by about $1.50, if that makes sense. So I'm going to leave it to you. I'll let you all tell me what you think. Raise the stop. Just say yes If it's a yes, it's a raise the stop to the next level that we've just come to. Or if it's no, then we can absolutely just leave it as is. So I'm going to look at the semiconductors because I realized we just missed it. So let me know your thoughts there, everybody. Yes for raising it, no for holding it. Let's look at semis, and then I'm going to use your answers in here to actually determine whether we raise or hold the stop. So real briefly, I'll let you answer that. Let's look at the semis. Yesterday, we were a little dubious about this maneuver, right? We talked about the semiconductors testing horizontal support, and boy, did it hold, everybody. When we had this segment, we talked about it at the hourly chart, how we needed to maintain that 55-60 zone, and we did. Now, we got a bounce, but we didn't necessarily break the trend, right? We bounced off the level, but we made a lower high here, lower than the bounce high here, and it likely presents as another opportunity for a test at 55.60. It doesn't mean we have to, but the way that candle resides right now, we could very well see one more test at 55.60, but it reiterates the importance of 55.60 in the semiconductors. As you'll see on that daily, we basically close. Let's see what the numbers are on the 20 and everything. So the 20 is 56.34, and the close yesterday was 56.37. So technically, we did close above the 20-day yesterday once more in the semis. So that means we still have not had a close below the 20 in even the semiconductors dating back to April 23. Pretty intriguing stuff, right? So let's see. Does today bring us that weakness? Do we get another test at 55.60 before a bounce once more? Is it a trade that takes us through 55.60 to the downside? Do we get a momentum-based sell-off? I don't know. Let's wait and see. But I want you to have those levels, approximate areas where you're going to be making decisions. Okay? All right, so there's your semis. I see a lot of great replies. First of all, I don't think I've got a single no in here. Unbelievable. So not just the majority, that was a 100% raise that stop, Horner. Let's go. All right, so we're going to do just that. I'm going in back to RTX, and I'm going to just right-click, cancel replace, and we are going to put this in at 145 and some pennies. Now, to the number, it was 145.15, but I want to give it a little bit more wiggle room, and I don't want to use a 0 or a 5, so I'm going to go to 145 and how about 8 cents? That should give me a nice odd figure below a level. I think it makes sense to do that. We're going to maintain it as a good till canceled stop order. I'll remind you once more that our stop is simply a trigger price. Market will be sold the very next trade. That does not mean we're going to be able to sell it at 145.08. We have gap risk. So if we closed above our trigger and opened well below it, so for example, if we close today at 146 and open tomorrow at 135, we're going to get executed pretty close to 135, not close to our stop at 145. So we're going to raise it nonetheless, hoping that we can capitalize a little bit further, but I want to give props to each and every one of you because I appreciate the thought process that you've all stated. Raise that stop, look to capitalize, follow your rules. Excellent decision from the group. Thanks, everybody. I appreciate you participating. Some of you, oh, great, Carol, I'm going to address this. Great. Raise the stop, but wouldn't you want to capture more profit? We could go even higher with the stop order. You're absolutely right. Not to discourage you from raising the stop to a higher level. Some of you would say, hey, Kevin, this is a wonderful move, but I might be worried about it giving some back, and I don't want to give back that profit. Some of you might look at maybe the intraday levels. Maybe it's like under the pivot point, or maybe it's the last time we were below the 20-period exponential moving average, that rising EMA. Maybe that's a level that some traders would look at. So don't fall in love necessarily with a specific level, but understand why we selected that level, Carol, more than anything else. You know that is simply us trying to stay with the trend. If you want to capitalize, let me give you a brief example of how a trader who may be wanting a tighter stop exit would look at this. The big thing could be that maybe that trader has a much larger position. Reminder, I only have 25 shares, not a big position relative to the portfolio, not a big position for our example. But what if you're the trader that was maybe over invested and you had too many dollars and now the stock is running on you? You may want to capitalize as close as you can, in which case that trader may want a much tighter stop. Okay, that would make sense as well. And the stock has had a big swing, everybody. I mean, our low at 144 to our last trade, we're looking at a 12-point swing over the last 3 days. That is a very big maneuver. So it always comes down to one's individual process for trading. Do you prefer to stay the course as long as the trend remains in place? In which case, the stop level that we've set here makes a lot of sense, working against that 20-day moving average, right? For some of you, you want to sell into strength. Maybe you want to take off 5% of a position just because it has pushed to new highs and it's rallying. Have a plan, build a thesis, and then give yourself the steps to take when that thesis plays out. We never know which way that thesis is going to go, but you want to have those steps to act, right? Absolutely, Lucky. You're right. You could sell half. Sell half, pat yourself on the back, and leave that stop in. Maybe even if you sell half up here, the trader says, well, that 20 days been so stout, but you know what? If I take profit today on half of my position, I might be allowed to use the 50-day moving average instead. And that would give me a much wider berth on my remaining shares. But a trader that took profit at all-time highs could potentially afford to give it more wiggle room on the remaining shares, right? So again, be thoughtful. Don't get mired in a box that says you have to do it this way every step of the way. If you have already cut your teeth sufficiently and you have done the selling into strength, you've done the trailing stop usage or traditional stop usage, and you've already determined who you are as a trader and what matters to you, then you're on the right side of things by and large, right? You've got a plan, you're comfortable with it, you're sticking with it. But if you're still in the process of figuring out which of those scenarios makes the most sense for you, well, there's only one way to do it, and that's to change things here and there, right? Try doing it one way, then make note of how it worked for you. Make note of how you felt about the trade. Were you emotionally tied to it? Or were you able to remove emotion from the process entirely? It is really, really helpful to have those experiences to draw on. Sometimes you got to give yourself the actual points of note. Draw it in your chart, put it as a note in your chart, make it really simple for yourself, okay? All right. Great discussion here, everybody. This has been fantastic. All right, let's move into some of those stocks in the news as we discussed off the jump today. We heard from Alphabet, Google, so let's look at Google. Looks like we've got a bit of a breakout here today. Let me reset my draw tools, my drawing set here, or my study set. So I'm going to turn off my trades. Here we go. So Alphabet has had a little bit of a slingshot here, everybody. As we often will point out, from when you're a technical trader, will look for bouts of pullbacks and areas of resistance, and then use those areas of resistance to let them know when things have shifted. And most recently, it looks like it happened here on Alphabet at this 180 level. Now I'm going to make that line green there, everybody, because as a spot, this could become an area to test as support. So you've got 180 as horizontal support. Many of you know textbook technical analysis suggests a breakout can then start trending thereafter, right? And that's what we've got, a very quick uptrend. This breakout led to a pretty good move here from the level, 180 up to the peak, about 9.5% today at the intraday high. Wonderful pop. But would anyone be surprised for Alphabet to come test the 20-day moving average? Probably shouldn't be, based on standard trend analysis, right? So there's a nice breakout, good run to the upside, validation in RSI down below with moves to new highs there into overbought territory. Remember, overbought can stay overbought quite a long time. So not a negative here. Now we are selling the news, so to speak, this morning, right? We had a great open that has sold down, but on an intraday chart, you'll notice it doesn't look horrible here. We had a R2 gap, and we've basically come back, allowing that 20-period exponential moving average to get caught up in here. So maybe this is potentially the low of the day. We'll see how that works for the remainder of the day. Alphabet did say they now have more than 2 million monthly users on AI overviews specifically, excuse me. So it says their new search feature continues to perform well. Their AI mode launched in the US and India, both doing very, very well. Says their YouTube Shorts now earn as much revenue per watch as traditional streams on YouTube, which I thought was kind of notable. And as a reminder, YouTube is a big, big part of Alphabet's revenue stream, but is still part of Alphabet, right? So if you believe in YouTube, I don't want to say my kids believe in YouTube, that's for sure. There's certainly a lot of action on YouTube in my house, but that is a big chunk of what Alphabet does. Recently, we had some reminders that maybe Alphabet's traditional search is not the driver it once was, even though we all still use Google as a verb, obviously. So I also had Barclays raising the target on Alphabet up to 235 from 220. And so that would represent a pretty healthy move, obviously, as we've been all-time highs are 207 and change. Citigroup raised the target on Alphabet to 225 from 203. Roth Capital raised the target to 210 from 205. Melius Research to 200 from 166. And finally, Wells Fargo raising from 177 to 184. But interesting level here being potentially achieved this week, everybody. Having moved through this last peak here, yes, we have the extension, but this is giving the feeling and the look of more of an uptrend here off those April lows than anything else right now. We'll see if that rolls and continues. For the immediate future, a lot of traders are going to watch that 20-day. Unfortunately, it's still about 11 points away from where we are right now. Okay, how about Tesla? Let's take a look at it. Now, I don't have an upgrade, downgrade detail on Tesla, but let's pull up the chart here. All right. So, I've got a Fibonacci drawn in. In fact, I'm going to go ahead and clean it all out. All right. So, no drawings. We've got an order out there, but really what we're looking at, eliminate my order. Oops, we've got a bit of a triangle, a little bit of a pennant in development here, don't we? We're still in it with today's lows. So, this is interesting because it's not bullish behavior per se. As you can note, our move here in the RSI is actually bearish in nature. We've got a lower high here, a lower high here, and another lower high here. This is all bearish behavior relative to the RSI. Remember, rallies into the 50 to 55 zone that are met with resistance, not ideal in trend. However, this is still price-wise, price action, still in the consolidation of the pennant. So many traders don't need to take any action just yet, right? Now, it is notable for some of us. Some traders would point out you're below the 20-day, you're below the 50-day, you're below the 200-day. That's not great either. But it doesn't mean the uptrend cannot be maintained. So we do have a pretty important trend line to monitor. Some will do it on an intraday period using maybe hour-long bars, or we could do it using 4-hour-long bars as well. If you'd like to kind of drill into some of this. But, you can already see the tail here today at the lows kind of gives you an indication that there was some support, some other people, some other traders monitoring this trend line, right? So we'll see if that maintains, if that holds. Mr. Musk himself says developing the new master plan for Tesla He says shareholders are welcome to suggest investments in XAI, and he says Tesla could see a rough few quarters ahead, cutting their fiscal 25 capex view to $9 billion from $10 billion, so a 10% decrease there. They do state further that the GOP bill and tariffs are harming their demand. So heads up to that extent, not exactly a wonderfully received view as it relates to Tesla's share price. However, when you look at something like this, where we've got lower highs and higher lows along the way, for a lot of traders, it's an if-then statement. In the meantime, nothing happens. But if we break the uptrend line up here over 335, some traders will go long. If you break the downtrend line under 300, for example, the uptrend line, some traders would then go short or take bearish positions. But from the standpoint of the trend is consolidating in nature. The likelihood from the technical analysis viewpoint is that a break of one of those white lines would dictate the next potential move. Of course, that doesn't work every time. We see it often that what we lay out as our thesis doesn't play out the way we'd expect. But we got to have a plan and a plan of attack when it happens, if you want to make the trade. If you're not interested in trading Tesla, then you can just move right on, obviously. But for a lot of traders, it's just going to be watching the trend, this little consolidation, to see if it's worth taking an opportunity here down the road. All right, let me see. I did have some upgrades. Okay, let's take a quick hit on Spotify. Spotify got an upgrade here today. All right, so here's the chart on Spot. We are below the 50-day moving average. We did have an interesting low tested yesterday. Spotify was upgraded at Oppenheimer to outperform from perform. New price target here is $800, which is lovely. That's $115 of upside premium. Again, no target is a guarantee to be achieved, but it looks kind of like a standardized pullback here. Let's see if any of these levels line up. One of them could certainly be just horizontal support here. Okay, so that's option one. We are potentially day 3 below the 50-day, which, look at how long we've been below the 20-day. So is anybody surprised that we've tested lower now that we are, in this area? We were 1 week below the 20-day, and the 20-day started to curl lower. There have been pretty decent indications of some pullback scenario associated with Spotify here. But this 669, 670 zone looks kind of intriguing. I think we could always throw up a Fibonacci move from that April low once more and see if anything is coincident. And how about that? All right, so the 38% retracement at about 665. And again, the low yesterday, how about that? 665.25. Always love it when a plan comes together. Not to suggest, obviously, that Fibonacci's are going to encourage traders to maintain it here, but it is notable that we got a hammer candle at that level. The 50% ledge could come into play. It was the midpoint back here when we were working through things. And you'll notice that the midpoint not only got broken, but retested here on the pullback to the 20-day. So you could certainly kind of validate a range between, say, 620 and 630 as another area of potential support. Won't disagree with you there, Thea. That does have the potential break, the look of a potential head and shoulder top, right? But if that is, in fact, a head and shoulder top, well, then the white line I've drawn in here at this 670 then represents the neckline. And if the neckline breaks to the downside, well, then we have the potential for the height of the pattern to be achieved, right? So we'll just take that line and look. Oh, my goodness. Well, I mean, if we're going to get specific, if it were to break, the measured move target from a head and shoulder pattern break viewpoint could target the 200-day moving average around 555, 560. Ocean Life, I'm glad you caught that A-Team quote. I was going to mention it, but I also thought that I might be a little old for calling it out in the show, but I appreciate you catching it. I always love it when one of my references gets caught by viewers. That's awesome. So, all right, everybody, I think we're going to wrap it up there. I really appreciate you all joining me today for a discussion on a number of key securities in the news today, not to mention a lot of good charts to look at here. But we did have a survey opportunity. Thank you for reposting it, Brent. If you'd be kind enough, everybody, would love to hear from you in the survey. So click that link and give a score, give me your thoughts, your ideas, etc. I always appreciate hearing from you. And thanks for giving me the chance to work through my voice issues this morning. Seems like we finished strong. But follow Brent and me on X, Brent Moore CS, Kevin Horner CS, and make sure you're subscribed to the channel here, everybody. If you liked today's content, I would greatly appreciate that thumbs up down below. We're going to get this one reviewed and back into the archives for all of you, and that'll help us on the replay. So thank you so much for being here. Have a fantastic Thursday, everybody. I look forward to catching up with you again real soon.